is aware of Cathie Woods' standing in the financial industry. So when she makes comments about particular stocks, people tend to ignore her. If you find her comments interesting, watch the video and don't forget to hit the like and subscribe buttons. Now that you've done that, let's start the video. While some investors are concerned with today's decline in the price of Tesla stock, others are still confident in their decision to invest in the maker of electric vehicles. Divergent opinions from experts can make it difficult to make a good big investment. See the video today to find out why Cathie Woods said it would be hard to buy Tesla stock following a particular incident before thoroughly vetting investment companies. Consider the company's bonds or stocks before selecting one. The stock market and the economy are also taken into despite the ongoing volatility of Tesla stocks. Analysts and investors keep a careful eye on the development of women and the movements of the company. Despite this, investors are still rushing to purchase stocks. 10ARK Investments recently updated its valuation model for Tesla and set a price objective of $4,675 for the company in 2026, which is thought to be the best-case scenario that it will reach over $20,000 by 2020. Despite this, Tesla is expected to expand even more from this point forward, according to the most iteration of ARK's open-source Tesla model. The estimated value per share in 2026 is $4,600. Several actively managed exchange-traded funds are managed by the American investment management company, ARK Invest, which has its headquarters in St. Petersburg, Florida. As of February 2021, the company managed assets valued at $50 billion. The bull and bear cases were calibrated to the 75th and 25th percentiles, respectively. Org Invest CEO and C, American investor Cathie Woods. A well-known stock picker is sometimes referred to as the most underappreciated investor in the industry, according to Forbes, because she not only makes compelling arguments for investing, but also has the data to back up her shockingly perceptive statements. In their 2021 open source, $3,000 was the projected share price for Tesla Model ARK in 2025. However, they changed their minds in response to important changes, including updated capital efficiency estimates and assumptions for autonomous ride-hailing. They also advanced their prognosis by 1 year to 2026. Tesla's projected robo-taxi business line, which is predicted to produce 60 of expected value in more than 50 of planned EBITDA, is said to be greatly influenced in 2026. Despite the fact that the profit margins for electric cars were substantially lower than those on robot taxis, all simulations indicate that by 2026, 57% of the company's income will come from them. Additionally, the new model from ARK Invest increases Tesla's capital efficiency. During the Model 3's peak in 2017, according to the model from the previous year, Tesla would spend between $6,000 and $8,000 for each additional unit of capacity in 2025, given its significantly higher capital efficiency than anticipated. However, given that Tesla's capital expenditure per additional capacity unit was closer to $7,700 in 2018 than it was in 2017, it may be safe to assume that Tesla will spend between $2,000 and $7,000 per additional capacity unit in 2026. The ARK has given a price target of $4,600 per share for Tesla for the year 2026. According to updates in their most recent model, the bear and bull situations estimates that might be worth roughly $2,900 and $5,800 per share in 2026, respectively. If this happens, the typical American won't be able to buy Tesla stock. It will only be accessible to those who are already at the top of the company's hierarchy and through his staff at Tesla Incorporated. Apart from a very competitive statement in support from the firm's CEO, Cathie further detailed the scenario. CEO Elon Musk concurs with Cathie Woods' remarks. According to her, this is because, in spite of other firms entering the electric vehicle market, their market share grew dramatically rather than decreased. By 2025, Tesla expects to be able to produce between 5 and 10 million vehicles. Org Invest Musk claims that if the company is successful in its operations, the price per share will be $3,000. As of the creation of this video, Tesla is valued at approximately $730 billion, making it the most valuable company in the world. The American Independent Investment Bank, which provides financial services to Piper Sandler companies, has increased its target price for Tesla to $1,350. according to Morgan Stanley's Adam Jonas. Piper said that it expects Tesla to generate more cash given the possible increase in stock value. Limiting the environment that electric cars can drive, according to him, Tesla is leading the electric vehicle industry's marathon at mile 21, but in a figurative sense, some companies are still in the lead and others are still tying their shoes. Thus far, Tesla has emerged victorious. According to Morgan Stanley, Tesla will produce about $9 billion in free cash flow this year and an additional $27 billion by 2025. So why should you buy a Tesla? The moment is now to purchase Tesla stock, according to a recent piece on US financial data published in Barron's Magazine, an American weekly magazine. Though some analysts forecast a crash and others foresee more than 100 gains, the argument over market movements in relevant statistics is far from over. However, criteria make stock in the market leader in electric vehicles appear exceptionally desirable. When the pandemic struck the U.S. in March 2020 and the market crashed, the metric looked good for the first time. However, Tesla has managed to beat Wall Street predictions even as some investors have sold their stocks because they have lost faith in the firm. According to Ronald Stephen Barron, an American mutual fund manager and co-founder of the investment management firm Barron Capital, Tesla easily surpassed Wall Street expectations of $2.20 to 30 cents per share and $18 billion in revenue. Additionally, Tesla's operating profit of roughly $1 billion was higher than analysts had predicted. Tesla shares had a notable boost from the previous trading session, rising by $5 per share to $11,171. Closing cost of $976. As previously mentioned, investors and analysts have differing opinions about Tesla's current stock market position. However, if Cathie is right and the price of a share of Tesla stock rises to $3,000, it will be impossible for the average American to own stock in the leader in the electric vehicle industry. If Tesla is unable to create a product that meets these requirements, there is a chance that technological and regulatory challenges would postpone the launch of the company's self-driving taxi service. Even though Tesla has set higher price per share requirements and prioritizes achieving total autonomy, ARK anticipates a gradual transition from its existing fleet of human-operated ride-hail cars to an autonomous ride-hail network. Positive analysts and investors foresaw that during the next 5 years, Tesla might yet launch a ride-hailing car that is operated by humans. Some were more gloomy, believe the firm will continue to dominate the quickly growing electric vehicle market and even branch out into other green energy industries like solar energy and energy storage systems. As per the bears, LA is a clear choice if one evaluates automobiles by range rather than brand. Elon Musk, who has demonstrated confidence in his leadership and vision for the company despite apprehensions from other investors regarding excessive Twitter diversion, has been dubbed Tesla Musk's Renaissance Man. Woods Arnold has acquired a significant portion of Tesla shares for the third time since October, demonstrating her continued confidence in the company's prospect. If you want to watch and see more news and updates regarding Tesla and other financial activities within the market, hit the subscribe button. If you find this video helpful, hit the like button. Don't forget to share this video with your friends. That's all for now. Thank you for watching, and we'll see you in our next one.